Welcome, it's Denome. You are currently looking at the history of the stock market of United States, 153 years exactly. So this chart goes all the way back to 1871 and it includes 500 of the biggest companies in United States at any given moment in time. And I saw something extremely scary in this chart that I want to share with you. So I found actually 3 reasons why I think there's going to be a major market crash in the next 3 to 9 months based on this chart here. And for those people who say that the chart actually doesn't matter, you're just doing technical analysis, it doesn't matter at all. Well, I want to counter that argument with this. This chart here includes all of the wars. It includes all of the presidents. It includes the hopes and the dreams and the devastations of investors and the real citizens of America for 153 years. So if you want to discount all of that, go ahead, do that. But I'm not that bold. I want to have historical knowledge, information when I do investment decisions, and I hope other people will do the same. And using this chart as the basis points for your analysis, in my opinion, makes a lot of sense. And let me show you the first thing why this is scary. But before that, make sure to like this video, subscribe to the channel as well, so you will tell the algorithm that this video should be seen by other people, so other people can get the warning as well. So now let me show you the first thing, the first scary thing about this chart here. And that has to do when we draw a trend line from this chart. From the bottom of 1932, and we simply connect the bottoms here in the same uniform line. This will be our trend line, the bottom of the trend line. And we can even adjust it a slightly lower here just to basically get all of the absolute bottoms here together. So if price would ever come back to this trend line here, let me ask you, what would you do? Your answer, or my answer at least, is to buy the living shit out of the S&P 500 index, because you are using the knowledge and information of 150 years for your benefit. And previously, every time price came close to this trend line, that was the absolute best time to buy the stock market. When everybody else was selling their homes, selling their assets at any possible price, that's when you should be buying the asset. But let's look at the other way, the tops of the market. So starting from 1929, when we connect that to the dot-com bubble here in the 2000, and we extend the line further, what do you see right now in the chart? Do you think the price right now is at a bottom, or would you say it might be closer to the top? My answer to that is it might be closer to the top. And this is the first sign, the first secret from this chart that you should see. So the 150-year history is telling me now that the stock market is at an extremely expensive moment in time in history. Now, I will still give it a 20% chance that it will break to the upside, but I'm giving it 80% chance that this was the top and we are headed lower next. And this was the first sign here. Let me show you the second sign why this might be the top here as well. And this will give us the 3 to 9 month time frame as well. So when we have a bull market, it usually starts slow like here. And from the bottoms here, you can start connecting the bottoms, the support levels basically for the bull run. And when you do that, that usually gives you a bull phase, a pullback, a bull phase, a pullback, a bull phase, and a pullback. But at some point in a bull market, you usually have an acceleration or a blow off top period. And that's what started here in 1995. You started to have a new trend line, a new angle. And from there, when it finally exited the market in the year 2000, that's when the bear market actually started. And the price pullback in the year 2000 was 50% to the downside. Then from 2003, so it was a 3-year bear market basically. From the year 2003 to 2007, the market went up 100%, and then it was followed up with 57% crash to the downside. But this was the time when it was time to buy the stock market, and from here until now, the stock market has rallied 750% roughly. So that was a good time for the stock markets. Now it's time to lock in those profits, in my opinion. So that was a nice thing there. So what's scary about this? Well, if we just repeat what has happened before and we connect the bottoms of the bull run, what you can see is this is the base of the bull run, and now we have an acceleration here. We did already have one acceleration, now we have a second acceleration. And this acceleration, when we take a look at, if you look at the bottom of the screen, now this is September 2024, October, November, December, then we are January 2025, February, March, April, maybe May, and then we're basically running out of the runway. So for the next, let's say 6 months, 3 to 9 months, the market may go sideways, may have pullbacks, even can trend to the upside here a little bit. But then we are basically running out of the space here, and with an 80% certainty, I will say that the market will have a crash in 2025. That's my take based on what has happened here. It may not happen, but let me give you the third reason why a market crash is impending. So this is the RSI indicator, or the relative strength index, usually known as the momentum indicator. And the momentum indicator, it gives you a signal if the market is, if the momentum is bullish, or if the momentum is starting to trend to the bear, to be the bearish trend. And one way to analyze it is if the price is making new highs here, higher and higher highs, while the momentum has lower highs and lower highs and lower highs and lower highs and lower highs. That is usually a signal that market will turn around very, very soon. And when we go now to present time, you can see we had an extreme here in 2018 on the RSI. Then we had another extreme here in 2021. And right now in 2024, we have another peak here. And each peak has been lower than the previous peak, while the price has continued to trend to the upside. So this is now giving me a signal that it's likely that this will go to the downside, this price here. The trend will turn around. So now we have those three signals. First, we're very close to the top here. We're looking at an acceleration and a blow of top phase here, while RSI is giving us a signal that the momentum is about to turn around. Those are the three secret signals here. So now let me counter some of the counter arguments that you guys might give in the comments. I know there will be some that I will miss, but let me at least counter some of the arguments here. The first counter argument, or the big counter argument, is this. This trend, what I just showed you here, can still go to the upside because it happened here in 1983 also. So in 1983, you were able to draw this trend line here and connect the tops here. Sorry. So when you did that, you were able to basically see that this would have been the top here in 1985. But that wasn't the case. The price actually went to the upside here. So the same thing could happen again, that we do go above the trend line there that I just showed you. But you have to also remember, what was the economy like in the 1985? So just imagine, what was USA like in 1980s? What were the movies like? You had your Star Wars, you had Indiana Jones, you had your Rocky movies, you had Top Gun, you had what other movies you had in the 1980s? You had let me think, Jaws, Back to the Future, just a lot of very positive movies about United States as a country. Music was very positive, and it was the only superpower pretty much in the world. The Soviet Union was in a decline in that moment already. United States was this powerhouse of the world. The United States dollar was the reserve currency of the planet. It still is, but is it as strong as it was in 1980s? Now with China rising, I don't think it is as powerful as it was at this moment in time. And also, when we take a look at the fundamentals, what you're currently looking at, let me go by one. These gray areas are recessions of United States, and going into 1985, you had a major recession here, which ended in basically 1982. And during this time, there was a lot of inflation in the market, as well as the interest rates were spiking all the way up until 22%. And then the interest rates started to fall down. By 1983, the interest rates were already down 2/3 from the top. And by 1985, you can see the interest rates were 8.58%. And obviously, compared to today's interest rates, these are basically nothing. These are still very high. But during that time, these were considered extremely low interest rates. And at the same time as interest rates were low, let's take a look at what was the federal debt compared to the GDP of USA. In 1946, the debt to GDP ratio was 119%. So there was a massive debt from the war, but the United States government was able to grow and they were able to pay back the debt all the way until basically 1981. And in 1981, the policy changed. And as you can see, from 1981, we have started to accumulate debt like never before. Well, actually, during the war, there was a lot of debt accumulation. But this was a time of loose monetary policy. And debt was easy to get, and there was a lot of companies building in the United States during this time, and a lot of capital was flowing into United States as well during this time. So that created a catalyst for the prices to go to the upside, as well as immediately after the 90s came, and during the 90s there was a lot of IT development, internet was growing, and you finally had the dot-com bubble here, and a lot of that dot-com era companies, they came from United States, obviously. So that was the catalyst for all of the price moves here. So do we have a similar mix up of good things in the United States? If you imagine the regular person in the United States right now, would you say year over year, is it easier to get a house? Is it easier to support or provide for a family? Is it easier to find a good paying job? I don't think it is. I think it's getting harder and harder year by year, which is signaling that a crash is probably coming. If there's no crash here and the trend will just be worse and worse for the average person, while it's better and better for the billionaires and the millionaires in the market, that's probably not a good thing for the economy overall either. So all in all, what I'm saying that I don't think the mix up is there for the markets to continue to go to the upside. Obviously, AI could be a bubble, but I feel like the AI bubble is kind of finding its ground at the moment, and there will be a lot of layoffs based on the AI, but I don't think that is going to be pushing the markets overall to the upside, because the market is powered by labor, powered by investment, and I just don't see a lot of people investing into United States in the same force as they were in the 1980s. I could be wrong here, that's just my take, and analysis why I'm giving 80% chance that this will break to the downside. So now, all of this said, where do I think the prices will go? Well, I think the crash will be between 30% and 60%. So let me show you those scenarios. A 30% move would take the price basically back to this trend line here. And that would be the first area of interest. Next area of interest is basically back to 2022 lows here, and that would be a 40 or 37% crash. That would be another option. A 50% crash would take the price to 2,800. It would kind of be in the middle here. It would be an annoying price point. The best price point would be a 60% crash, basically back to the COVID crash levels here, and that would basically be the same as this trend line here. A 60% crash is pretty much unheard of in this history, so I highly doubt we will get a juicy opportunity like that. The most likely opportunity will be a 30% crash. The second most likely opportunity will be a 40% or 37% crash roughly back to these lows, because it is also, when we analyze the market, it is also quite common that we are seeing like a double crash, like we saw here. We saw it previously, basically here as well. Basically the price just going back to the same price points multiple times over. So if the price will come down to this level here, it would make a lot of sense here. A similar thing, the price basically came back to the same level, a little bit lower actually on the second try. So if the price would go to 2022 lows, I think that would be that would make a lot of sense as well. A high confidence play. This, let's say 60% move, that's far-fetched move that is unlikely to happen, but it is possible, because if we were to get that opportunity when everybody is bearish, only thing you have to do is take in the 150-year history of the S&P 500 index and base your investment decision on that. Don't base your investment position on the subjective experience of the past 6 or 12 months of extreme bearishness, of extreme fear and doubt and uncertainty. That's my take on where the price will go. Now, all that being said, we still have that runaway 3 to 9 months. And during this time, while the S&P 500 will likely go sideways, maybe a little bit up to the upside, or it will have pushbacks and pullbacks during this time, a lot of money will exit the S&P 500 because there are better investment opportunities, in my opinion. One of them is obviously the United States Treasury bonds or debt. So if you can get 5% yield on your United States dollar during this time with extremely low risk, because the government will most likely not go bankrupt, why wouldn't you take a guaranteed 5% yield on a time like this, when the market is most likely going to go to the downside and you're most likely not going to see a 750% gain anytime soon in the stock market? So I think a lot of money will be looking for that safe haven home where you can still get guaranteed yield on your capital. And at the same time, while people are looking for that yield, I think there may be a chance where speculative assets like Bitcoin and crypto will do good. But when this bubble actually bursts, I think that will spread to crypto as well. So when this bursts, you shouldn't have crypto at that moment in time. Bitcoin, on the other hand, may still be a good asset because banks will be crashing during this time as well. And when banks are crashing, your money may get stuck. Maybe you will get your money back, maybe you will not, but at least it will most likely get stuck. And when that is the case, Bitcoin might be a good place to have your money, because Bitcoin is not tied up in a financial sector as long as you have Bitcoin in self-custody. You can have a wallet, a software wallet or a hardware wallet. If you want a hardware wallet, you can use a link in my description to get a hardware wallet. so that the it's a little bit more safer than just a software wallet, which is constantly connected to the internet, whereas a hardware wallet is offline. So there's extra protection there. But anyway, Bitcoin, gold, and cash is basically the assets that you probably want to hold, but mostly you want to have cash and probably gold during this time. Even gold is going down, but at least it's in your own control. It's not hopefully in a banking vault somewhere where it can be confiscated by the government. And if the crash is massive, you can expect capital controls all over the planet, and you can expect confiscations of assets, prosecutions of people during this time. So it will be a very annoying time to be alive for that period of time. People will get extremely hostile. So make sure you have other protections in place before this market starts to really crash. So now I'm giving you kind of like a doomsday scenario, but you have to understand that this is not a doomsday. It is simply a market crash, and it has happened before, and it will happen again. And I think it's going to happen in the next 3 to 9 months. Now, I may still be wrong. I hope I am. I hope we will get a miracle like in the 1985, but I doubt we will this time. I think we're headed for a crash. But that's basically everything I wanted to share in this video. Now, if you like this video, make sure to hit the like button, share this video with your friends who might benefit from knowing that a crash is most likely coming, and how to protect their capital as well. So if you also want to get updates like this, subscribe to the channel. And that's all I had for this video. See you in the comment section or in my Discord group, which is free, by the way. Thanks, and bye bye.